Hello and welcome to the Business Standard Morning Show. I am Thirumoy Banerjee and here are the stories for the day. Indian economy grew at a weaker than expected 4.4% in Q3 of the current financial year. Slowdown in consumer demand was one of the reasons. While the government says that the Q3 GDP numbers will still be revised upwards, experts point out that the rural economic growth is still slow. So, what does the data say? Also, what do high-frequency indicators suggest about consumption, and do they back up the recent GDP data? Bhashwar Kumar brings you the answers.
India's GDP growth slowed to 4.4% in Q3 FY23 on the back of a contraction in manufacturing output for the second consecutive quarter and a slump in consumer demand. In the December quarter, growth in private final consumption expenditure or private spending slowed significantly to 2.1% from 8.8% in the preceding quarter. Following the release of the official data, some experts argued that consumption was mostly driven by urban and semi-urban regions, while the rural economy was not recovering fast enough. Against this backdrop, what do select high-frequency indicators say about Q3? Like the rest of FY23, GST monthly collection was above the 1.4 trillion rupee mark in Q3 too, indicating improved economic activity. GST collections in October, November and December grew 16.6%, 11% and 15%. However, better compliance and assessment also had a hand in this. Unlike in October, the other winter months of November and December saw double-digit year-on-year jumps in peak electricity demand. Still, all 3 months saw an improvement in peak demand, indicating an improvement in economic activity compared to pandemic-affected 2021. October, November and December saw a significant year-on-year jump in passengers travelling by railway. This held true especially for the festival month of October. Revenue earnings from freight also clocked double-digit year-on-year growth in October-December 2022. In October and November, the year-on-year expansion in two-wheeler sales was not encouraging when compared to that of passenger car sales. These months coincided with the festival period following 2 years of COVID-19 restrictions. Since car sales are considered an urban-focused data set and two-wheelers indicate rural consumption, one way to read this would be that pent-up demand has perhaps fizzled out in rural areas. Adjusted for inflation, rural wages hardly rose in October and November 2022 from the comparable months in 2021. Data for December is not yet available. According to Nielsen IQ India, in Q3 FY23, the FMCG segment saw a drop in price growth in both urban and rural markets. But in terms of volume, while the urban market maintained stable positive growth, the rural one continued to decline.
My own sense is that the kind of trend that our high-frequency indicators are showing is clearly indicating that even while recovery is on, the recovery is not very homogeneous or a broad base. It is more a K-shaped recovery where the people who belong to the upper 50% of the income bracket, they have come back to the spending spree, whereas the people who fall in the lower 50% of the income bracket, they are still struggling with a number of things. Firstly, the high inflation has eroded their purchasing power. Secondly, the COVID-related impact is still lingering in many ways. They may have undertaken a fair amount of, say, loans to tide over the crisis. So all of that is playing out. So it's a mixed bag, and unless and until, and this is also getting reflected into the consumer. I mean, if you look at the IIP numbers, the consumer durables in the first 9 months of the current fiscal shows a growth of 3.5%, which is not a fantastic growth, but yes, there is a growth. But when you look at consumer non-durables, they are still contracting 1.2%.
So, what do experts have to say about consumption in Q3?
There is a rural-urban divide, there's no question about it. And this is symptomatic of the K-shaped recovery. And this is not getting bridged because non-farm jobs are not growing, especially not in the MSMEs and especially not in the unorganized sector. And the reason why you're seeing the urban job urban economy racing away and it's showing in the consumption is because um, the, the, the formal sector, the organized sector has been capturing market share in the same product groups where the unorganized sector was also quite important. Rural consumption will certainly lag urban consumption as we go forward because the unemployment is much higher, wages are much lower. 54 million people went back to agriculture in 2020 and 2021.
Chief Economic Advisor V. Anantha Nageswaran has contended that the Q3 FY23 GDP print could be revised upwards. Meanwhile, a number of experts have said that India's rural economy is not recovering fast enough, with consumption being driven largely by urban and semi-urban regions. The high-frequency indicators examined here show that both sides could be right. We may only get better clarity by the second or third revision of data.
A good monsoon, meanwhile, may revive rural consumption, if only El Nino doesn't play spoilsport. Let us move on to a subject which has kept most investors on the edge for a while now. The Adani Hindenburg saga continues to add new chapters. At a time when investors are trying to reduce their exposure to the Adani Group, a Florida-based asset management firm has bought in almost $2 billion worth of stakes. It's the GQG partners led by its co-founder Rajiv Jain. So why is GQG gung-ho on Adani? Tushar Verma brings you the answer.
The Adani Group was shaken when the USA-based short seller Hindenburg released its scathing report accusing the group of stock manipulation, among other accusations. The 10 stocks together have since lost a whopping $150 billion in market valuations. However, since the past few days, the Adani stocks have been rallying successfully. A prime reason is the fresh investment by GQG Partners, an asset management firm led by Rajiv Jain, its chairman and chief investment officer. The firm has invested nearly $2 billion in 4 of the 10 Adani stocks. These are Adani Enterprises, Adani's Ports and SEZ, Adani Green Energy, and Adani Transmission. Soon after the news of GQG's investment in Adani flooded the media, the Adani stocks picked up strong gains. In the past few days, the stocks have gained up to 17% in market value. The question is, why is GQG gung-ho on Adani?
Adani is the only group in the country which has got the on-the-ground infrastructure assets which they have built. Then as a result of which they are having the ability to predict the cash flows which can be generated out of these assets. So currently the cash flow position has already been established. These assets are matured now and they are steadily growing. So the EBITDA from these assets expected to grow at the rate of 20% over next at least 5 years. They have been averaging it around 22% over last 10 years. So that gives also an additional amount of comfort to anybody who buys this asset.
GQG Partners is a huge investment firm. The asset under management is upwards of $90 billion. Based in Florida in the United States, the firm has made contrarian bets even in the past. Speaking to an Indian financial daily, Rajiv Jain said that GQG had bought shares of Infosys in 2019 when the company was going through a whistleblower case. The shares of Infosys had then fallen 30 to 40%. So, what other contrarian bets have the GQG partners made in the past?
The other investments that they have made prominently are HDFC and ICICI Bank. Both the strongest franchises in their own rights and probably bought when they were most neglected at a valuation which has been far more lower. Both these banks have their niche, one in the housing finance and second is in the area of the corporate banking, the retail banking, and also I think investments into different other verticals, including insurance verticals or securities verticals. So the strategy seems to be very accurate. Then such kind of large franchises are available at a valuation which is neglected and compelling. At that point of time, buy and stay invested for a longer period of time to make the best out of these investments and return out of it.
The Hindenburg report had led to many in the market being wary of investing further in the Adani Group, while some others tried to reduce their exposure to the group. GQG, on the other hand, bought in Adani stocks. So, why does GQG make contrarian bets?
Buying of such a large investment in a contrarian way is the best position that one can take when one has to outperform the market. When you manage the total book around $92 billion and investing into the emerging markets through these funds that they are operating, two funds that they are operating, the contrarian bet is the only solution to generate higher amount of return for the investors.
The investment by GQG partners may provide a lifeline to the Adani Group following the Hindenburg debacle. The allegations levied by the short seller had pointed towards regulatory failings. The expert panel constituted by the Supreme Court will probe the matter, and its final assessment may lay to rest all doubts pertaining to the Adani Group. It remains to be seen if and how the Adani Group reclaims its lost glory.
It is not only the Adani stocks that are gathering steam. Indian equities have also shown a smart rebound in March, with benchmark indices rising 1.5%. Are all the negatives priced in, and is the worst over? Nikita Vashisht takes a look at the risks that investors need to be mindful of. The calendar year 2023 has left investors nervous. The benchmark indices are down up to 3% on a year-to-date basis, despite gaining some lost ground in March. Though the markets have staged a smart recovery from their recent lows, analysts believe global and domestic headwinds are rising. The first and the most prominent one among them, according to Devang Mehta of Centrum Wealth, is inflation trajectory and hawkish tilt of global central banks.
The bond markets globally had priced in further rate hikes, but now what's happening is the January jobs report as well as the retail sales data as well as the strong labor market are making them to sort of revise their expectations on the rate hike front. Core inflation in US as well as in India remains stubbornly sticky. That's also one of the factor why the Fed as well as the Indian central bank RBI probably would stay a little more hawkish.
The stubborn inflation may upset investor sentiment more in India, as 2023 could be an El Nino year.
All instances of drought in India in the last 20 years have been in El Nino years. So again, this is one of the key monitorable that the market would track, because the fate of rural economy, which is showing a signs of recovery, again depend on whether there is a drought or not, whether the monsoons are normal. So this is another part which I think is very important for government as well, because it's sort of laying down the vision in the budget for rural recovery as well as capex.
Commodity prices amid renewed geopolitical tensions also need to be watched going ahead, analysts say. The fourth key risk is the unabated foreign capital outflow from Indian markets. So far in CY23, foreign portfolio investors have sold equities worth over $2,650 million. In comparison, they have cumulatively bought equities worth $14,921 million across Indonesia, South Korea and Taiwan due to their relatively cheaper valuations. Analysts expect the pressure on foreign flows to continue amid Fed tightening and China reopening. Lastly, investors need to closely monitor the earnings trajectory going ahead. An analysis at Dolat Capital shows that the October to December quarter was the fifth consecutive quarter of net downgrades, and it expects the slowdown to continue in Q1 and Q2 of FY24 amid weak demand. That said, analysts at BNP Paribas feel that despite the near to medium-term challenges, India remains a long-term bet for the economic and political stability, favorable demographics, and likely benefits from supply chain diversification. Overall, higher for longer interest rates due to sticky inflation present near-term challenges for the Indian equities. China's reopening and weak corporate earnings could further spoil the party. On Thursday, the markets will take cues from global peers and US Fed Chief Jerome Powell's testimony. after the financial markets, let us see how technology is evolving and integrating. Connecting your Android phone to a computer or a laptop has always been a difficult task, but Microsoft's Your Phone app has made it possible. And now, the company has launched an advanced version called Microsoft Phone Link app. It will also help you connect the computer with the iPhone. Find out more about it in our Decoded segment.
Microsoft Phone Link is an application that allows an Android phone to connect with personal computer having Windows operating system. Microsoft has also introduced the Phone Link for iPhones too, which is available in Windows 11. The Phone Link application allows the user to make and receive calls and messages, and take photos and videos using the phone's camera from the personal computer. This app can make the user's life easier as he or she can avoid the juggling between the devices by streamlining the activities to one device. Once the application is downloaded and devices are connected using a QR code, users can open the Android applications, access and transfer files from both the devices, and communicate via phone calls, messages, and social media without taking the phone out of the pocket. And if the phone is out of reach and the user gets a call, the Phone Link application allows the user to attend it through the PC. Phone Link's another good feature is that it allows the user to access phone camera from a PC. This feature is very useful, especially when creating video content. The photos and videos can be readily available through Phone Link, which helps in editing of the content. The Android version of Phone Link has advanced customization features too. The user can choose which notifications to appear on the PC and can decide the colors and layout of the application too. Also, the Open Phone Screen option allows the user to see the phone screen in PC as exactly as in the phone. The Microsoft Phone Link was initially available in Android Samsung phones, but later it was updated to operate in most of the Android devices. But the Phone Link version for iOS is currently limited and only available to receive and text messages through iMessage. The group message facility in iMessage is not currently available in Phone Link.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
With the next update of Windows 11, users will also be able to set up Phone Link by just scanning a QR code. That's all for today. For more news and analysis, please log into business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.